Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for SwitchFact.tv. And today, guys, I thought it's best to look into ourselves as Web3 DJs, crypto natives, so to speak. Well, most of us anyway. Yeah, I'm not talking of tourists who only come during a bull market. They come for the good times. And when things are going down south, they move away. I'm talking of natives, crypto natives. So we're going to be diving into the psychology of a crypto investor. We could say a crypto DJ, but a crypto investor, I think it sounds better. What motivates us, the demographic profiles, and all sorts of things. So if you're interested to know what kind of person you are, we are, they are, within crypto, the crypto natives, that is, this is the video for you guys. But before I proceed, please know that what I'm going to share with you in this video is not financial advice. Please do your own research. Do not take what I'm going to share with you in this video as any advice of any sort. If you do require financial advice, please actually approach someone who's trained to give you financial advice. This content is also not targeting UK audiences for obvious reasons. You are not meant to be watching any crypto related content if you're from the UK. That said, let's come back to this, and I feel it's objective enough. Research-backed analysis of what a typical crypto investor, broadly defined, tends to look like today, what drives them, and what they care about, what it takes for them to win, and whether the current market structure is favorable for them. I'll also use some illustrative cases and academic findings to support the arguments I'm going to be making for you guys. So if you are a crypto native and you want to know what the outside world think of you and view you or perceive you, this is the video for you. Strap in, grab a drink, let's jump in. Let's start by what drives the typical crypto investor, motivations, and the psychology. Starting off, we've got demographics and profile, and according to recent research from 2025, the data is suggesting that a large portion of crypto investors are relatively young. That counts me out, right? Millennials, roughly ages 28 to 43, remain a dominant cohort, with Gen Z also growing quickly in many regions. Many crypto holders are middle to upper income earners. I think, yes, there are some who are 28 to 43, that range, who can earn that much, but you'll probably find that not many of those earn that much. Most likely the top end, they probably don't earn that. Just me, this is not data, I'm just talking aloud here. And there's also a non-trivial minority of those who earn over $100,000, and they contribute disproportionately to total holding. Education and digital literacy tends to be above average, so if you're in crypto, you're smart by default, right? According to one 2025 global user demographic survey, over half of crypto users have at least a bachelor's degree. Yeah, over half, but doesn't make us all smart, right? There you go. And many crypto investors are relatively young, somewhat tech savvy, and they have enough disposable income or risk appetite to endure volatility. Why? Of course they do, because they live in their parents' basement. They don't pay rent. It happens. Not a laughing matter, but there you go. So what motivates them and what do they prioritize? Well, there is high potential returns and growth. Historically, the promise of outsized returns compared to traditional equities or savings, which remains a primary driver. There is also perceived diversification and alternative asset appeal. Recent 2025 data suggests a growing portion of investors now view crypto as a portfolio diversifier rather than purely speculative play, especially amid macroeconomic uncertainty. And that cohort, the crypto cohort, that is, I'm talking of crypto natives, not tourists who come and go. There is belief in the long-term vision of DeFi and Web3, blockchain infrastructure, as well as financial sovereignty. For some, crypto is not just an investment, but a bet on technology, decentralization, and the future financial system. Surveys have found performance expectancy, that is, belief in crypto's potential, strongly correlates with continuing crypto invest. And this group, the crypto native, they also enjoy and are excited each time they think about crypto. So you could say there is enjoyment, excitement, social and speculative drivers. Yeah, you're talking of emotional and psychological factors such as thrill-seeking, excitement, social identity, belong to a community, and optimism about being early also play a big role. I think what has happened to Bitcoin as well, where the early Bitcoin investors made a killing, talking from next to nothing to reaching 126,000 at the latest all-time high. I think that's what giving people hope. That's why you end up hearing people saying XRP will get to 10,000 in token. Never gonna happen. Anyway, moving on. This cohort as well, the crypto natives, they've got a high risk tolerance and they accept risk. Many crypto investors have high risk tolerance, willing to stomach volatility for possible reward. Studies show risk preference is a key determinant for entering and staying in crypto. Now, what does it take for them to win as investors? What does success look like? Because not all of us coming into this space are winning, right? So, given motivations and market structure, the ideal crypto investors, statistically speaking, tends to have the following. They tend to have a long horizon and risk tolerance. These are the natives only. They are willing to hold through volatility, drawdowns, and market cycles, trusting long-term structural theses, for example, blockchain infrastructure adoption. So if this does not describe you, you are not the crypto native I'm talking about. But if you want to be known as a crypto native, you need to try and change your time horizon and your risk tolerance. Next, this cohort is into diversification beyond a single coin or project. Bitcoin maxis will be screaming about this. So if you are just into Bitcoin, you are probably too conservative to be called a crypto native. I'm just saying, Bitcoin maxis, don't kill me. Given research that shows many crypto assets are uncorrelated or behave differently over time, optimal portfolios avoid all eggs in one basket. It can take you this far. Maybe if you're a Bitcoin maxi, you may want to put some Cardano and some Ethereum in your bag. I'm just saying, don't kill me. And crypto natives, they also are active in managing risk in their portfolios. This is because the market is volatile and sometimes inefficient following news events. Rebalancing to avoid over concentration or chasing hype is critical. Okay, and then there is this psychological resilience and self-awareness of behavioral biases. You're talking of fear, greed, overconfidence, and anchoring, which helps avoid panic selling or FOMO-driven mistakes. Now, if you're one of the Bitcoin OGs, probably this doesn't apply to you because you've held for over 10 years and you won't make any impulsive moves. You know how to play the market. You've been forged in fire. Next, due diligence and selective conviction. We're favoring assets, projects with some fundamentals, technology, community, and utility over pure hype coins. So most crypto natives, you won't find them aping all their life savings into meme coin. I'm just saying. So if you are aping all your savings, all your resources into meme coins, you are not a crypto native. You are a tourist, just coming for the good times and walk away. Or you are a grifter. You know what I mean by that. So is this current market structure ideal for a typical crypto investor? Well, the pros for the current market structure, there is maturing infrastructure and liquidity options, increasing institutional adoption. You're talking of ETPs and ETF products, regulated exchanges, and more sophisticated tools make it easier for average investors to access crypto without needing deep technical expertise or custodial risk. Reports show hedge funds, large investors, and even non-traditional financial firms allocating modest but growing percentages to crypto. I mean, just this week, Bank of America recommending their advisors to offer some of their clients between 1 to 4% into Bitcoin. I think it will be extended to crypto because I think altcoins is where most growth will be. Safety, it will be Bitcoin, but if it is about sizable gains, I think it will be in altcoins because once Bitcoin settles, the air will be sucked out of Bitcoin by altcoins because some of them do actually offer alternatives to things or processes we use in the real world. Talk of tokenization and all sorts. There is also the diversification appeal amid macro uncertainty with inflation, geopolitical risks, sovereign debt. Many investors see crypto as an alternative. They want to be left holding the bag. And that diversification motive has become more prominent with time as well. Next, you got demographic tailwinds and broader adoption where younger generations, we're talking of Gen Z and millennials, are increasingly participating within the crypto market. The on-ramp barriers, you're talking of wallets, exchanges, and knowledge, keeps lowering thanks to better user experience, education, and regulatory clarity. The only thing that will probably work against some of these younger generations or younger groups is attention span. They want to be rich yesterday and go and drive that fancy car yesterday. So that could work against them, but they're getting in at the starting end, so things should work out for them. But there are some challenges to consider for the current market cycle or market structure. You go to high volatility and risk exposure. As recent academic work shows, a broader buy and hold across many crypto assets often leads to extreme downside. So not every crypto asset ideal for buy and hold. Some you buy and you flip when you've made some money. Don't buy and hold, you'll be left with nothing. There are some projects that showed potential during the last bull market, but they've died away. Why? Because they were the wrong buy and holds. Ask me, I've got the scars to prove it. There are some challenges as well when it comes to behavioral and psychological biases. Yeah, you're talking of fear, greed, overconfidence, recent bias. Just told you some projects. I thought, okay, this is project. It's a recent project and it did well. It can only get better or it can only go up. That doesn't happen. And let's not forget regulatory uncertainty and systemic risk. Even though infrastructure is maturing, regulatory risks, security concerns, you're talking of hacks and scams, tokenomics, vulnerabilities, macro headwinds can wipe out gains. Many investors underestimate those risks. And finally, you got survivorship bias and skewed outcome. Here, research suggests only a small subset of assets, you're talking of the top quartile, delivers outsized gains over time. Many will underperform or deliver massive losses. Luck and selection matter. So, the current structure offers both opportunity and danger for disciplined investors that are informed. It means a fertile ground for those chasing hype or emotionally reacting. It's a minefield. So, please approach this carefully. So, what does a typical crypto investor really look like? Here is a summary or a framework that you can apply to yourself to see if you can define yourself as a native crypto investor or a crypto native, just crypto investor because even those who invest in meme coins, they are still crypto investors. So yeah, you got demographically, you're talking of millennials and Gen Z, tech savvy, digitally native, majority. I'm not saying they are all, I'm saying majority. Of course, you will have some of the OGs that are way older than this, but majority that are in the market currently. Some could be forced because they may have been holding projects from 2020, 2021, and they lost money. They can't hold now. That's called forced belonging. Okay, and economically, and their income status, talking of mid to upper income, probably those that are investing, some disposable cash, willing to risk for upside. It could be that they live in their parents' basement. That's why they've got that much disposable income to throw into crazy things and risky things like crypto. And they are motivated by the prospect of long-term growth, diversification, belief in blockchain, and financial sovereignty. Some speculative appetite as well. And some of them is probably a must, because even though they are earning good salaries or good wages, they still can't make it in this world because it's just tough. It's challenging. It's challenging across the board unless you're a billionaire. Everyone else, I think, you were suffering. So yes, if you hear anyone in crypto saying they don't need the money, ask them to cash out. They will tell you something else. Say, if I do that, it'll be my purchasing power will be eroded, which then comes back to, so you need the money. That's what it is. And when it comes to risk and psychological profile, this cohort is after high risk. They're comfortable with volatility and relatively resilient emotionally. I'm not sure about that, but you could say most, yes. Because if you can stomach a 30-40% decline in an asset, some 80% if you're talking of what happened in October, they're still here after that or even buy more, then yes, you can stomach exceptional volatility. And their strategy is to win. They're after diversified portfolios, long-term views, select asset sourcing, risk management, periodic reassessment rather than blind hodl. Unfortunately, that area, most of us, we need to work through that, because sometimes we hodl things we're not supposed to hodl. Why? Because we belong to a community, and then that community or the leaders of that community dump on you. So we are all trying to work through that. But there are some challenges, like I intimated in the video: emotional biases, potential regulatory or cyber risk, market cycles, survivorship bias, and overall high volatility. So to tie it all up, guys, the typical crypto investor is in many ways well positioned, younger, digitally literate, risk tolerant, and drawn by growth as well as diversification potential. They embody the profile that historically has benefited in bull cycle from crypto's explosive upside. Moreover, the evolving infrastructure, talking of ETFs and ETPs, regulated access and institutional participation, increasingly lowers barriers for them compared to the raw days of 2017 to 2018. And the big caveat here is crypto remains one of the most unforgiving markets. Research shows that many investors or passive holders will underperform or even take heavy losses if they fail to be selective, manage risk, and avoid psychological pitfalls. Now, what sort of crypto investor are you? Are you a tourist, or you are one of those who think success in crypto today is less about buy crypto and forget it and more about disciplined portfolio construction, risk management, emotional self-control, and continuous reassessment? If you are that, then that puts you in an advantageous position because you accept the turbulence, you do your homework, you manage risk, and stay adaptive. Let us know in the comment section what type of crypto investor you are. Until the next one, guys, FD for CityFab.tv signing out for now. Bye.